Blinkit, Instamart and Zepto are about to face their toughest competitor ever, Amazon now. Amazon India's 10-minute delivery arm has entered the quick commerce battlefield with a scale India has never seen before. After Bangalore and Delhi, Amazon now is racing towards 300 dark store by the year end, and this single move could rewrite India's entire quick commerce business model. And I'm going to tell you this story through 10 simple charts. So stay tuned. Now let's first look at the network comparison. Amazon will be setting up some 300 dark store by December 25. So by this month end, they will have 300 dark stores. Blinkit has got some 2,100. Swiggy Instamart has got 1000 plus and Zepto has got 1140. If you look at Amazon now, they are focusing on Metro, Bangalore, Delhi NCR and Mumbai. Blinkit is present in 153 cities. Swiggy Instamart is in 100 cities and Zepto is in top metro and large cities. If you look at Amazon, it's a late entrant, but it's a very focused player and they have the network advantage. Now Blinkit, if you see, they are infra leader. They have a very good network of dark stores and they are densifying and expanding by the day. Swiggy slowing new store additions because you need a lot of cash, a lot of capital. Zepto, focus on unit economics. So Zepto wants to be profitable rather than capturing the opportunity which is there right now. So अगर आप Amazon का focus देखेंगे, Bangalore, Delhi, NCR and Mumbai, now this is very important. The metro focus model initially, and tomorrow maybe they will roll out in other cities. So we will understand more about how much the top metro contributes to, let's say, Blinkit, Swiggy and Zepto, and how important are these metros. So now if you look at Blinkit, 90% of their GMV, gross merchandise value comes from top 8 cities. So it's a very concentrated, if you see, the areas from where the revenue is coming. Now, if you look at Blinkit's GMV from Delhi NCR, Mumbai and Bangalore, हमने इसको और काफी granular लेके गए हैं, तो it's 40 to 60%. So this is the area where Blinkit is going to face competition from Amazon now. 40 to 60% is huge. Metro GMV share, if you look at, Metro contributes the bulk of GMV. I mean, that you have seen, 40 to 60%. And after these 3 metro, they can easily, move to other 3-4, metro areas. So that in a way will bring 80 to 85% of the GMV. So the entire business is concentrated, let's say, in the top 6 or top 8 cities of India. Non-metro GMV share is only 15 to 20%. Now that's where Blinkit, Instamart are expanding, building infrastructure. But if you see, the revenue contribution is very less, but the cash burn is very high. Top 6 metro GMV share, like we said, is 80 to 85%. The fight, for this quick commerce or 10-minute delivery is going to happen in the top 6 cities. So Amazon now is going to hurt, Blinkit, which is part of Eternal, and also Instamart, which is part of Swiggy, and Zepto anyway is focused on the unit economics, but these two are the big players. So this also shows कि Amazon की strategy क्या है in the short to medium term. So इसको और detail में समझेंगे हम next slide में. Now if you look at Amazon now is focusing on high margin areas, which are the top metros, like we said, where 80 to 85% of the GMV is coming. Prioritizing GMV, dense segment, and third, avoid tier 2, tier 3 expansion, because that's where you need a lot of capital. So as part of their strategy, they are putting their money on these top metros or the top areas which bring 80 to 85% of the GMV. And clearly इससे लगता है कि the kind of pressure that will come on Blinkit and Swiggy is going to be immense. और इसको हम और ज़्यादा डिटेल में समझेंगे आने वाली 5-6 slides में. Now let's look at the product range and the value edge comparison. Now if you look at Amazon now, it's very broad. As we all know, they have a widest range of products. Second is the private label strategy. Amazon ecosystem labels. They have a ecosystem of private labels where the margins are very high. And third, value proposition, high selection plus the cost leadership. Nobody can beat Amazon, the kind of network they have. Blinkit, if you see, core groceries plus essentials. There are also direct private labels and price focus and dense network. No doubt, the kind of network Blinkit is setting up. Instamart, essential plus Swiggy perks. Inline private labels. Even they are also doing a lot of private labels. Value pricing plus large network. Zepto, if you see essential plus food experiment, own brands in staple foods, price plus premium experiments. So the private label strategy is very important for margins and profit. So let's understand, Amazon Now's private label, strategy, because that is going to hurt, Blinkit and Instamart. Now मैं कुछ items को check कर रहा था Amazon Now में, from the price point, especially, the private labels. Now, if you look at fabric conditioner, which is like a after wash, product. Now they have an Amazon brand, 2 liter. They are giving at $299, and the cost is $499, almost 500. The 500 product they are giving at 300 rupees, almost 200 rupees discount. So this is their Presto brand. Now let's look at the dishwasher gel. The cost for a 5 liter is $499. Let's say 500, and the cost is 900 rupees. So a 900 rupees product you are getting at 500. So clearly there is a 400 rupees discount here. Now look at this liquid detergent. 849 is the cost, and you are getting at 284, 300. And look at the cost. Look at this, Harpic kind, toilet cleaner. Again, the Presto brand. It is, so the MRP is 740 because there is a pack of 4, and the cost is 350, 349, 350. So a 740 rupees product you are getting at 350. Now imagine with the kind of network Amazon has got, and the product and the cost, leadership here, they are going to bleed, Blinkit and Instamart in the years to come. So we have seen the cost leadership, the private labels and the cost leadership part, and how the business is concentrated in the top metros, and that's where Amazon is going to hurt Instamart and Blinkit. Now let's look at the kind of offer Amazon Now is offering. Now if you see, the delivery speed is 10 minutes delivery. It's matching what Blinkit and Instamart is offering. Cashback offer. They are giving flat 100 rupees cashback. Amazon Now. Recurring cashback slabs, 50 rupees on 400 purchase, 100 rupees on 750 purchase. Handling and search fees, 0 handling fees. Now this is something we keep seeing in Blinkit and other apps. So they are saying 0 handling fees. Free delivery threshold above 150 rupees, 149 you get a free delivery. Additional card benefits है, extra 3% cashback है, on card that you can check. Now minimum order value for cashback is above 749. So for this card thing, if you make a purchase of 749 and more, you get a 3% cashback, on certain credit cards. Product category, they have the widest range, groceries, detergents, staples, everything. So Amazon is offering you almost all the product. But the good part, if you see the kind of cashbacks or the incentive or the discounts they are offering, on every purchase. Again, this is going to hurt, Blinkit and Instamart the most. Now let's go into more detail into the cash burn part, for Blinkit and Instamart. So I have these 4-5 slides for you. Now the very first is the Amazon's war chest. They have unlimited ability to subsidize order in the years to come. Now that is very important. Now if you look at, they have the largest balance sheet and the capital capacity among all the Indian quick commerce players. And unlike others, because there is a lot of pressure on the listed companies, Eternal and Swiggy. Now Amazon doesn't need quick commerce to be profitable in near term. Now since Amazon has no stock market or investor pressure, they can continue giving aggressive incentives. 50% cashback, like I said, on a 400 rupees order, 100% cashback, 750 order, 0 handling fees, 0 search fees, free delivery above 149. Now these type of incentive you will keep getting, and this will hurt the most the Instamart and Blinkit. Now as a result, what will happen? The competition will be forced into giving higher discounts. Now ye problem kaise aayega? Because Amazon now is focusing on metros and the top cities, jahan se sara business aata hai, and then they will be forced to give cashback and other kind of incentive. So that is going to impact the margins, and then they will need more capital. And if there is a equity dilution, the valuation will get impacted, for Eternal and also for Swiggy. And then the investor will also keep asking, they are making some money in the food aggregator business, and that money is going into quick commerce, building the quick commerce network where it's difficult to make profit in the years to come. So clearly the profit pool, the top metro profit pool is at risk, for Eternal and Swiggy. And actually, if you see, the top three metro decide the profitability, Bangalore, Delhi NCR and Mumbai. And here is a note from Bain and Red Seal, the consultant, and they have said that going beyond metro, lower unit economics and wider radius है तो higher cost per delivery होता है is very natural. Lower order density, poor store level utilization, no doubt, and smaller basket size means lower average order values. Now combine this with the metro price war that is going to happen. So negative contribution margin even in core cities, the ones meant to subsidize expansion into a non-metro. Now this is very important. So here the war on metro is going to upset the unit economics because earlier they were making better margin here on the metro side and they were putting money in non-metro, but with this competition their unit economics will get upset. So if you look at the longer term, no one except Amazon can sustain this kind of incentive and this. Now if you look at Blinkit, profitability is still fragile. Only recently they hit adjusted contribution level positivity. A price war could push it back into a negative territory. Now Instamart, the Swiggy, if you look at, has slowed down dark store expansion intentionally to conserve capital. In fact, they are in the market to raise another 10,000 crore funds. They have already got the board approval, so very soon they are going to raise additional 10,000 crore fund. Amazon aggression will disrupt Swiggy's path to profitability. Zepto, they are pushing for unit economics, so investor emphasizing store level profitability. A metro subsidy war, because since Zepto is majorly present in the metros, so that will disrupt their unit economics, and again cash burn will start for Zepto also. Now let's look at the kind of cash these players have. So if you look at Blinkit, which is internal, which is also known as Zomato, they have some 18,000 crore plus. So they are well stocked, with in terms of capital, and if you see, they have the strongest cash buffer. But this can deplete very fast. The kind of rollout we are seeing from Amazon now. So next 6 months to 1 year will be very important. As Amazon now will expand from 300 dark store, maybe let's say to 500 or 600 next year. Swiggy and Instamart, if you see, they have 17,000 crore and high consolidated burn that we have seen. They are raising another 10,000 crore. So they will be sitting on a much comfortable position with some 27,000 or 30,000 crore. So that is under threat because as Amazon now expand, the cash burn will deplete very fast. Zepto, they have 7,000 crore plus. They are not a big player, but heavy burn is expected. Amazon now, as we said, effectively they have unlimited money, and they have already planned some $233 million spent in 2025, which is ending now. So very soon we will see the next capital allocation for next year. So as of today, Instamart and also Blinkit are well stocked, but that funds are under threat. As Amazon now will expand. Now to sum up, I'll say the storm is coming. So what we have seen right now is just one player. Amazon now expanding into 10 minutes delivery. But if you see, there is Reliance Retail. You have Tata's. And with big basket, and then you have DMart. So Tata is there, in 7 minutes, 10 minutes delivery. So they haven't aggressively entered into this 10 minutes, battlefield yet. So imagine if they will expand, and with the kind of capital they have, imagine what will happen to Blinkit and Instamart. Now, other big question which the investors will ask, if you see Swiggy and Eternal. So the profit from the food and the grocery business will increasingly be diverted to fund the quick commerce expansion. Tomorrow investors are going to ask this question: how long you will keep fighting this battle? at some point of time, they should focus on profitability rather than expansion, because expansion is going to be unlimited in India, with the kind of geography we have. And third, if Reliance, DMart, and Tata, they join Amazon, so it will force deeper discounts, incentives, across the sector. And finally is the valuation question. In the years to come, let's say next 3 to 5 years, competition is going to be intense, with Tata's, Reliance, and DMart. And as a result, there will be lower margins and faster cash burn. That will, in a way, delay the profitability for the listed player. And just to make a disclaimer, this video is only for educational purposes. In case you want to buy, sell, hold any of these listed companies, I suggest do consult your financial advisor.